All right, buckle up, Buttercup, because I am about to drop a truth bomb that will make your head spin and your wallet clench at the same time. In the United States of America right now, the average divorce costs somewhere between $15,000 and $30,000 just in legal fees, and that is before you split a single dollar of actual money. And here's the kicker that nobody tells you when you are busy picking out wedding cake flavors. About 41% of first marriages crash and burn, 60% of second marriages go down even faster, and 73% of third marriages basically explode on the launch pad. So if you are building a micro business while you are married, you are literally building your dream house on a fault line and pretending the ground is not shaking. That is the hook. That is the scary stat, and that is why you need to sit your butt down and listen to this whole breakdown. If you are new here, welcome to the channel where we talk micro business, real talk. No corporate fluff, no fake Lamborghini nonsense, just raw numbers and real strategies that work in America right now. Today we are talking divorce and money, who gets what, and why most entrepreneurs get absolutely destroyed in court because they believe TikTok advice instead of actual American law. Let us be honest, divorce is not just emotional heartbreak. It is a full-blown hostile business merger in reverse. And if you own a micro business, a side hustle, an Etsy shop, a pressure washing rig, a vending machine route, a little LLC you started in your garage, you are walking into court with a target on your back. Your spouse might not have ever packed a single order or answered a single customer email, but the law in America says they might still own half your grind. Brutal, I know, but I would rather you hear it from me now than from a judge later while you're sitting there in a cheap suit sweating. So I'm giving you 9 savage truths, 9 brutal secrets that most people get dead wrong about divorce and money in the United States. Write these down, tattoo them on your brain, because every single one of these has bankrupted a micro business owner I personally know. Number one, your separate property is not as separate as you think it is, not even close. Everybody in America loves to say, oh, this house was mine before marriage, so it is safe, or my grandma left me this money, so it is mine. Legally, that starts out as separate property, yes, but in almost every single state, once you start mixing that property with marital life, you just contaminated it. Lawyers call it commingling, and judges hate it because it makes their job harder. Let me break it down in dumb, simple American terms. You bought a condo in Austin, Texas before you got married. Great. Then you get married and you start paying the mortgage with money from your joint checking account where your wife's paycheck also goes, or you add your husband to the deed because you had a sweet anniversary dinner and felt generous, or you use 10 grand from your joint savings to redo the kitchen. Boom, you just turned separate into marital. Now your spouse has an interest. I have seen this play out 100 times. One dude had a rental property free and clear before marriage and lost 40% of it because he used marital money for property taxes for 4 years. The court does not care about your intentions. It cares about the paper trail. Number 2, your micro business growth during marriage is marital property, even if your spouse never worked a single hour in it. This is the one that sends entrepreneurs into a full panic attack. And I get it. You started that LLC after you got married. You stayed up till 2 in the morning editing videos, sourcing products, dealing with Karens in the DMs. Your spouse was literally on the couch watching reality TV. You think it is yours 100%. In the eyes of the law in America, nope. If you built it or grew it during the marriage, the value created during that time is marital. So if your Amazon FBA store was worth 0 at marriage and now it is worth $300,000, that 300 grand is on the table. The court will force a business valuation. That means some boring accountant in a bad tie will go through every Stripe payout, every Shopify report, every bank statement, and then your spouse gets a piece of that value. It does not matter that they did not help. The logic in American family court is that by handling the house, raising kids, paying some bills, they freed you up to hustle. You may think that is insane. The judge thinks that is fairness. So if you are a micro business owner, you better be separating business and personal accounts yesterday, paying yourself a real salary and keeping insane records. Otherwise, you are gifting half your empire. Number 3, debt is community too, and it will bite you harder than assets. Everyone fights over who gets the house and who gets the business, but nobody wants to talk about who gets the debt until it is too late. Listen, in America, debt works just like assets. If you racked up debt during the marriage for marital purposes, you both own that mess. That means that $15,000 credit card you used to buy inventory, that $20,000 loan for a work truck, that Best Buy card full of laptops for your business, that is marital debt, even if it is only in your name. But here's where it gets messy and savage. In community property states like California, Arizona, Texas, Nevada, what is debt during marriage is split 50-50 no matter who swiped. In equitable distribution states like Florida, New York, Georgia, North Carolina, the judge tries to be fair, but fair does not mean equal. So one judge might give you 60% of debt because you make more. Another might split it weird. And if your spouse goes out after you separate and buys a brand new boat just to spite you, guess what? In some states, that still counts as marital debt if the divorce is not final yet. So you could be paying for your ex-revenge boat for years. This is why in America you want to freeze joint cards the second you know it is over and document the date of separation like your life depends on it, because it kind of does. Number 4, alimony is not just for rich dudes in Hollywood movies anymore. It is for regular people too. There is this old myth in America that only millionaires pay alimony. Totally false. In 2026, courts in America award alimony in regular middle-class divorces all the time. If there is a big income gap, if one spouse stayed home with kids, if one spouse supported the other while they built a micro business for free, alimony is absolutely on the table. And they do not just look at your W-2 like amateurs think. Judges in America look at lifestyle, they look at cash flow, they look at your business profit and loss, they look at what you claim on taxes versus what you actually spent. You cannot tell the court your business made 10 grand last year while you post poolside pics from Vegas every other weekend. They will impute income, which is a fancy way of saying they will decide what you should be making and charge you based on that. I know a guy in Ohio who tried to lowball his income, and the judge pulled his Instagram and added 30 grand to his imputed income just from vacation photos. Savage, but that is how it works now. Number 5, retirement accounts and stock options are invisible only in your mind. The court sees everything. This one crushes people. You have a 401k through your day job. You have a little IRA. You have some stocks on the side, maybe some RSUs from work. You think if you never touch it during divorce, it stays yours because it is in your name. Wrong, wrong, wrong. In America, any money you put into retirement during the marriage is marital property, period. Even if your spouse never contributed a dime, even if they did not even know it existed, if you contributed $50,000 during the marriage, your spouse has a claim to half of that 50. The court uses a document called a QDRO, which lets them split a retirement account without early withdrawal penalties. Same with stock options that vested while you were married. Those are marital too. People forget this and then get hit with a $50,000 surprise. For micro business owners who also have a 9-to-5, this is where you lose big if you are not planning. Number 6, hiding money is the fastest way to get absolutely demolished by a judge. I know when you are hurt, you want to be sneaky. You want to move cash to your brother. You want to say your business only takes cash now. You want to open a secret crypto wallet. You want to underreport Shopify income. Let me be super clear in plain American English. Do not do it, ever. Judges in the United States have seen every trick in the book, and they have zero patience for it. They hire forensic accountants who live for finding hidden Venmo transfers. And when they catch you, and they almost always catch you, they do not just give the money back, they punish you. I watched a dude in Florida try to hide 80 grand in a friend account, and the judge gave his wife 70% of the entire marital estate just to teach him a lesson. That extra 20% punishment cost him over 200 grand. You want to be mad? Be mad. But be honest in court, because lying in American family court is financial suicide. Number 7, fighting to keep the house is often the dumbest financial move you can make after divorce. Emotions make people stupid about real estate. Everybody wants to keep the house because it feels like winning. It is where the kids grew up. It is your safe space. You painted it yourself, whatever. But let us talk American real numbers. If your house has $200,000 in equity and you have to buy out your spouse, that means you need to come up with $100,000 cash and refinance the whole mortgage in your name alone at current interest rates, which are not cute anymore. So now you have a bigger payment on one income, plus you had to drain your business savings to pay your ex. You did not win. You just bought yourself a super stressful, expensive box that you cannot afford. Sometimes the boss move, the real micro business owner move, is to sell the house, split the equity clean, and use your share to stay liquid, keep your business alive, and rent for a year while you rebuild. Unsexy, I know, but being broke in a house you love is still broke. Cash flow is king in America, not drywall. Number 8, child support and business income are not calculated the way you think. If you have kids, listen up, because this one ruins micro business owners. In America, child support is based on income, but for business owners, income is not what you put on your tax return. The court will add back a bunch of stuff you wrote off. That truck you wrote off, that home office, that phone, that travel, that meals deduction, the court may say, nah, that is really personal benefit, and add it back as income for support purposes. So even if your tax return says you made 40 grand, the court might say your real income for child support is 80 grand, and then your support payment doubles. I have seen this destroy side hustlers who got creative with deductions. Keep it clean, keep it legit, because family court does not play the same game as the IRS. They have different rules, and they are way more strict when kids are involved. Number 9, a prenup or postnup is not unromantic. It is the smartest business contract you will ever sign in America. People in America think prenups are only for rich people or for people who plan to divorce. That is like saying car insurance is only for people who plan to crash. Dumb logic. If you have a micro business, a prenup or a postnuptial agreement is a business protection tool. It can say what happens to business growth, who keeps what debt, how you handle a house, everything. Without it, you are letting the state you live in decide for you. And trust me, California does not care about your feelings. A good prenup in America can save you hundreds of thousands and years of court battles. It costs maybe 2 to 5 grand to get one done right. That is nothing compared to a $50,000 divorce fight. If you are already married, you can still do a postnup in most states, and it is not too late. It is awkward to bring up, but being awkward for one afternoon is better than being broke for 10 years. Now, let me hit you with an analogy that makes this whole thing click, because legal stuff is boring until you see it in real life. Think of marriage in the United States like like starting a 50-50 general partnership with no operating agreement, no exit plan, no vesting schedule, and you are both super in love, so you never write anything down. You mix money, you mix dreams, you mix debt, you share customers, you share a house, you share a life. Then one day one partner wants out. There is no paperwork that says who gets what. So now you got to hire lawyers to figure out who contributed what, who grew what, who owes who, and the state steps in like a super strict HR manager who thinks they know better than both of you. If you kept no receipts, if you mixed business and personal money in one Chase account, if you never paid yourself a salary, that breakup is going to be a bloody nightmare. That is exactly what divorce is for a micro business owner. It is a business divorce without a business contract. And judges in America do not care about your potential, they care about paperwork. And here is why I care so much. Here is my personal stake. I have watched 3 close friends who had super promising micro businesses lose everything, not because the business model failed, but because the marriage failed and they had zero protection. One had a killer detailing business clearing 15 grand a month, mixed all the money with his wife account, got divorced, and had to sell his van and equipment just to pay the settlement. Another had a 6-figure Etsy shop, never separated inventory costs, and her husband got half the valuation even though he never touched a single order. These stories are not rare in America. They are common. That is why I am so loud about this. Separate your accounts today. Open a business checking account that only you touch. Pay yourself a consistent salary. Document every loan, every investment, every time your spouse helps in the business, even if it is free labor. That documentation is your armor. So here is the big question that always starts a full-blown war in the comments, and I want you to be brutally honest. Do you think it is fair in America today that a spouse who never lifted a finger in the micro business still gets half the growth that happened during the marriage? Or do you think that is straight-up theft of someone else's hustle and sweat? I know you got an opinion, so drop it below. Are you team it is a partnership so everything should be split, or team you only get what you actually built with your own hands? And if this video saved you from a future financial disaster, if it made you think about your money a little differently, do me a favor and hit that subscribe button and turn on notifications, because we do not do fake guru nonsense here. We do real American micro business numbers that put cash in your pocket. And next week, I am doing what literally no other channel is doing. I am dropping the full Airbnb arbitrage breakdown with real spreadsheets and real addresses right here in the United States. I'm talking actual rental listings with exact addresses, exact rent amounts, exact furniture budgets from Amazon and IKEA, exact cleaning fees, exact occupancy rates, exact monthly profit and loss, city by city. No theory, no maybe, just cold hard numbers from deals that are making real people an extra $3,000 to $10,000 a month without owning a single house. If you want that spreadsheet and you want to see those real addresses, you got to be subscribed, because that video is going to be insane, and YouTube is not going to push it to you unless you tell it to. See you in the next one. Let us get this money.